Hello and welcome. You're watching Market Edge, and one of the stocks which will be in focus is HDFC Life. You can see some of the numbers flashing on your screen. 3,515 crore is where that annual premium equivalent number has come in at. In terms of the growth versus what was expected was 3,500 crore. And in terms of the growth versus expectations, that's coming at 9% on a YOY basis. So there's been a late single-digit kind of growth, slightly ahead of estimates, just very, very slightly, right? But what's really stood out is the VNB number. The VNB number has come in at 879 crore. Again, 9% growth on a YOY basis. And again, maybe 3 or 4% higher than what we were penciling in, or the consensus was penciling in. 850 crore was the expected number, and it's coming around 29 crore higher than that. So around 3.5% higher. When you're looking at, as a result of that, the VNB margin number, that number has come in at 25%. The expectation was it will come in at around 24.3%. So we'll have to wait and watch as to what the reaction on the stock will be on Thursday's day of trade. But broadly, that's how the numbers have shaped up. But Snehi, let me take it across to you. Give us a sense of how the market played out for the day of trade of Wednesday.
Absolutely. Lots of earnings reactions we've seen. Grow has been one of them. Good moves coming in. Nuvoco Vistas for a second straight day continues that positive earnings momentum. You've got a bunch of other stocks from the broader end of the market that have done well on the back of their earnings reaction. Couple of public sector banks came out with their numbers. Union Bank was one of them as well. So that those have been some of the highlights in the market. But if I take a look at what has happened at an overall level, we've slipped below the 24,100 mark. It's been a range-bound day of trade yet again. 0.1% higher coming in on the Nifty. Sensex 2 has seen a 130-point uptick, close to 0.2% higher on that one. Nifty Bank has looked slightly better, 0.5% uptick over there, as has been the case with the broader end of the market, both the mid-cap and the small-cap spaces. Sectorally, your defensives, the traditional defensives, were under pressure with cuts on IT, FMCG and pharma being absolutely flat, while the bigger cut was on metals. On the flip side, it was PSU banks that did well, followed by oil and gas, finance, banks, energy, auto and pharma. If I have to take a look at the tilt of the market, the advance decline ratio was in the favor of the advances. You had about 306 stocks in the green, with the rest of them in the red from the Nifty 500 group of stocks. But the biggest casualty of the day was Patanjali, close to 15% cut on that stock. But the management has reiterated that there is no regulatory concern and all looks well. They're on track to achieve their FY27 guidance, and quarter one has shaped up for them well. Tata Elxsi, on the back of weaker than expected numbers, was lower by 4.5%. Physicswala, JSW Infra, Go Digit, Delivery, some of the biggest losers. On the flip side, Nuvoco, like we spoke about, 10.25% higher over there. Ather doing very well on the back of that Hero investment that was announced, 8% uptick over there. LTTS, Grow, you had Triveni Turbine, Gujarat Fluoro, BHEL, ABB, Swiggy. All of these stocks have done well. The other big talking point towards the end of the trading day was the cabinet meeting outcome, with a significant outlays for the mobile manufacturing scheme. The urea scheme has been passed for fertilizer stocks, so they were in action as well. And of course, the semiconductor production has seen a massive outlay of 1.27 lakh crores. So looking very healthy for some of those names like Keynes and Dixon too. While that has largely been the action that we've seen on Wednesday, let's get a better sense on the technicals in terms of what to expect on Thursday, the day of the weekly Sensex expiry, and ahead in the week, and as well as next week too. And we've got Mr. Ajit Mishra of Relicap Broking joining us on the show. Ajit, hi, good to be speaking with you. We've been range bound as ever when it comes to the market, but we've held on to the 24,000 mark for now. What are going to be some levels to watch out for, both on the support and the resistance, and what could the next hurdle for the Nifty be on the upside?
Yeah, good afternoon, Snehi. So yes, it's a tussle and it's been going on since while. Means off late we made an attempt to reclaim almost like 2-3 months of highs, but we couldn't sustain. Means the long-term average is around 24,400 plus zone, plus the previous swing high closer to around 24,600 mark. But the good part is that at least we are not bleeding yet. Means the way the crude has rebounded from 70 to 86. Look at rupee, again 96 plus, but still we are somehow managing to hold the recent swing lows close to around 23,800 mark in the Nifty so far. So it seems like that consolidation is underway, and the buoyancy in banking combined with some stability in the IT majors, post numbers, all these factors, especially from the heavyweights, and the outperformance from the broader indices is somehow managing to offer you buying opportunities amid this consolidation. So near-term outlook still looks same to us, means this consolidation is likely to continue in the index, at least in the near future. And 23,800, 24,400 broadly could be the range. So in the interim, stock-specific approach in the sectors, themes which are relatively stronger is something that one should focus on.
Talk to us about themes first. I'll come to stocks in just a minute, Ajit. But give us your view on themes. What is it that one should focus on in terms of themes?
So, Harsh, pharma is one basket wherein we are seeing relatively higher strength, means, and broadly the participation is strong. Then we have banking, private banking majors are holding pretty well. Then some of these stocks from the IT basket, though it's difficult to say that we are completely out of woods when it comes to the IT, but relatively, yes, they are looking firm on at least in the short term basis. Then we have select counters from the auto ancillary basket also, which are relatively okay. The broader market, mid cap, small cap, they are offering better opportunities, but the volatility is slightly on the higher side since we are in the middle of the earnings season. So keeping that in mind, selective opportunities across sectors. At the same time, some of the FMCG names, and then we have stocks like IEX, which is relatively weak. One can continue with shorting opportunities also as and when the market offers.
Understood. So that's some of the sectors and the stocks that have made it to your radar. But Ajit, what about some stock-specific recommendations for our viewers? You did say that it's time to be looking at some stock-specific action. Anything that looks good on the charts right now?
Sneh, today we were seeing that ABB, Siemens, they all were buzzing in the trade. And in fact, if you see, that's been almost like 2-3 months of tight range consolidation that we were seeing in most of these names. And today it was a decisive up move, which was witnessed in ABB. So that can be considered for as a fresh long candidate with 6,900 as stop and 7,800 as a positional target. And like we've recommended about pharma being a steady theme. So Sun Pharma, which is gradually inching higher, quoting at record highs. So we anticipate this up move to continue. 2090 is what we are eyeing as the immediate target area with 1880 as a stop loss.
To understand, Ajit, this 14.5% downtick on Patanjali, do you think that we can see probably a bit of a reversal just given the strong volumes that we saw today? Any indication of how likely the day of Thursday will play out for the stock?
Harsh, it was noticeably some rebound was witnessed from the days low close around 328 was the area, and we could manage to hold around the 347, 348 mark. But I doubt that it could be a meaningful reversal in a single day because the way the volumes increased on the down day, it was almost 8 times of the average volume. So usually 1 crores of shares get traded, and it was 8 crores plus mark on this sharp down day. So it may take some time to stabilize. And downside close around 295, 300 is where we have the next major base for the stock.
Okay. And in terms of some movers from the Nifty PSU banking space, Ajit, we've seen some good moves coming in from names like Bank of India, Central Bank, SBI, Union Bank. All of them have done well. And in fact, Union Bank was also an earnings candidate. How are you looking at some of these names on the charts, and what would the preference or the pecking order be on the charts when it comes to the PSU banking basket?
So yes, in fact, if you see, Sneh, we were seeing steady outperformance from the PSU pack. So be it Maharashtra Bank, Indian Bank, they were leading from the front. Just a couple of weeks ago, they were at their record highs. Now we are seeing a bit of a profit taking, but as you rightly mentioned, stocks which are sitting on the sidelines in the interim, stock like SBI, Union Bank, Bank of India, they all are now buzzing in the trade. So SBI looks relatively better to me, considering the stock is still holding around the long-term averages, and we have not seen much of volatile swings in comparison to what other stocks are experiencing. So here we have 980 to 1000 as a strong base area, and above 1060 we can see the stock inching towards 1120 or maybe higher. And then we have Bank of India, which is also witnessing volatile swings, but relatively it is okay. Means 130.35 is a very strong base area. And once, let's say, we cross 150 mark, then probably we are set for the uh, next leg of the up move towards 165 to 170.
Which will be in focus on Thursday's day of trade, viewers, is going to be a Himadri Speciality. I'll just quickly read out the numbers to you. Blockbuster numbers. 1,432 crore is where the revenue has come in at. 28% growth on a YOY basis. EBITDA moderated slightly in terms of the margin number, but still an 18% growth eked out at an EBITDA level. Record EBITDA, by the way. When I'm looking at EBITDA even last quarter, which is Q4 FY26, that number stood at 245. That number stood at 242 crore. I beg your pardon. And it's coming at 288 crore. So record EBITDA number, and profitability also has surged by 10% on a QOQ basis. 27.5% on a YOY basis to 229 crore. So very strong set of numbers from Himadri will well be in focus. Ajit, whether you track this or not, if you can give us your view on charts.
So yes, sir. I guess markets were anticipating good numbers, because if you see, that's been almost like 2-3 months of steady up move. But the good part is that before the numbers, at least from the last 1 month, the stock has been trading in a very tight band closer to its record high. So it's a kind of like a buying pivot that stock has already formed, and it looks set for the next leg of the up move. So 640.45 is the area basically where we have the immediate base. And in the next leg, since we are at the record highs, but basis the consolidation, probably the stock can inch toward 800 plus marks. So positionally, one can definitely look at even at current levels for fresh buying with 640 as a stop.
Okay, so that's on Himadri Speciality, robust set of numbers coming in. And Ajit, what would your take be on some of the IT stocks that have seen a little bit of shave off, and particularly something like a Tata Elxsi? Weaker than expected numbers, 4.5% cut is something that we've seen on the stock, and then joining that is a little bit of moderation in the large cap players like TCS, Infosys, and then from mid cap you've got Emphasis too. Give us a reading on some of these names. Which ones are you liking from the IT basket? Which ones would you be avoiding?
So Snehi, what we mentioned, that apart from banking, this stability in IT is definitely playing an important role, because the way we were seeing a steady downtrend in IT majors, and in fact the mid cap IT also started fizzling out. So after this rebound, at least we are not seeing any sign of decisive downtick, or any sign of fresh pressure, so which is definitely a comforting factor. But yes, profit taking on every rise is something which is natural. So means Nifty ID index, we have reclaimed the short term averages, the 20 EMA mark, which is around 27,900 levels. So gradually we can inch towards the 100 EMA mark, which is close to around 30,000 area. So we still have decent upside when it comes to the Nifty ID index. Relatively, some of these mid-cap IT names like Tech Mahindra, if you see, amid all this kind of choppiness that we were experiencing in the IT majors, it was holding very strongly in this band of 1300 to 1700. It's been almost 1.5 years now. The stock has been trading in this band. And after this recovery, it seems like that stock is forming a fresh buying pivot. It has reclaimed the major averages. So possibly we can see the next leg of up move towards 1650, 1700 mark. And then we have Coforge also, which looks relatively stronger. Means again at all the major averages, it has reclaimed, quoting around the previous swing high. So here also we anticipate a gradual up move towards 1700 plus zone. So with stop at 1400, one can look for fresh accumulation in Coforge also. Stocks to avoid, Tata Elxsi definitely is one of the counter where we are not seeing any respite. And then we have some of these heavyweights like Wipro also, where we are not seeing any decisive action.
All right. Thank you so much, Ajit, for coming in, giving us that perspective. Sets us up well for Thursday's day of trade. Let me go across to Darshita. She's here with what cues that we want to look out for Thursday's day of trade. Darshita.
Right, July 16 is expected to be packed with triggers, which the markets will be watching out closely. And back home, it's weekly Sensex expiry, which could keep the volatility elevated through the trading session. And globally, investors will track key US retail sales and the initial jobless claims data for cues of the health of world's largest economy. And from the UK, industrial production and trade balance number will also be on the radar. The biggest focus, however, will be on the earnings. In India, Tech Mahindra and Wipro will headline the IT earnings season, and results are also expected from BHEL, Geo Financial Services, Polycab, CET, 361 WAM, South Indian Bank, ITC Hotels, and several other companies. Globally, earnings from Netflix and Taiwan Semiconductors, or TSMC, will be closely watched for insights into consumer demand and the AI semiconductor cycle. On the corporate front, PS Jewelers Board will consider a QIP fundraise, while Aurum PropTech will also discuss a fundraising proposal. And the primary market, Alpine Tech's World and SBI Fund Management IPO will be closed for subscription, while Laser Power and Infra is set to list on the exchanges.
Okay, thank you so much for that, Darshita. Let me go across. We're joined by Gaurang Shah, Senior Vice President, Geojit Investments, joining us this afternoon to give us a perspective of how he's likely to see the weekend, because it's a packed weekend. It's not going to feel like a weekend, Gaurang, for some of us. And give us a sense which stock, which of these Nifty banking stocks or Nifty bank stocks will surprise the most on the upside versus the kind of moves we've seen maybe over the last couple of weeks?
Hi Harsh, thank you so much for having me on your show. Good evening to you and to all the viewers of ETNA. Small disclosure, which is mandatory, Harsh, that all recommendations that I'll be sharing with you this evening on your show, they're part of our fundamental research team recommendation from a long-term point of view. Our company, Geojit, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we give similar investment ideas to our clients. They might have their investment interest. So, Harsh, I think first of all, banking sector is something that excites me a lot. Both in terms of select private sector banks, select public sector banks, and strong NBFCs. So to answer your question, yes, Saturday is going to be a result-heavy day. We'll have Axis, HDFC, ICICI, Kotak, and Yes Bank, I believe, coming out with the numbers on Saturday, which is 18th of July. So yes, it's going to be a busy weekend for all of us, dissecting and analyzing the numbers. To answer your question, which is the large private sector bank, which has actually impressed us in terms of earnings delivery, by default, it is ICICI Bank. HDFC Bank had its own set of problems in the recent 3 to 6 months in terms of news flows. Axis Bank, too, can you compare on numbers quarter on quarter for the quarter gone by last financial year? Comparing the three, I think ICICI Bank stood out. But as a disclosure, Harsh, we have coverage on all the three large private sector banks, HDFC Bank, ICICI Bank, and Axis Bank. And one number that actually stood out in the public sector bank was Indian Bank, Harsh. And Indian Bank has been delivering a stellar set of numbers. Expectations.
I believe the last part of that audio got cut. So after Indian Bank, you said the numbers there were strong. Thereafter, what exactly did you kind of put out?
So I think both in terms of for Indian Bank specifically speaking, Harsh, I hope I'm reaching to you loud and clear.
Yes, very much.
So Indian Bank, I think consistency in terms of earnings over the last many quarters, Harsh, Indian Bank has been, raising the bar for its own performance and, of course, for the performance of select comparable public sector banks. So again, we had a coverage on Indian Bank some time back. Our targets were in place. Then we put it under review. And just today, we have come out again with a buy recommendation on Indian Bank. So Indian Bank stands out. State Bank of India, incidentally, last quarter, if I am not mistaken, Harsh, there was a little bit of pressure on the treasury income front, but I think that was one-off. On State Bank of India, also, we have a positive coverage. L&T Finance, I think on all parameters, if you actually go to these, since the time they did hive off the not so very contribution business on the balance sheet, and now they're focusing on their core strength, I think that's actually showed in terms of improvement for L&T Finance. And when it comes to the large private sector banks, as I discussed earlier, I think ICICI Bank is much better in terms of results delivery and consistency.
Okay, understood. Gaurang, hi, thanks for that breakdown. I'm just looking at some of the large private sector banks in terms of their valuations, where the stocks are trading right now compared to their 5-year historical average. For like an HDFC bank, the 5-year average is at 2.5 times. The stock's 1 year forward right now is 2.9. Similarly, we've seen moderation when it comes to ICICI, Kotak and Axis. IndusInd Bank has not moderated versus its 5-year average. It's trading like at a slight premium. But for the other 4 names, HDFC, ICICI, Kotak and Axis, where do you think from a valuation perspective the risk reward looks most attractive?
So again, Sneh, hi, good evening to you as well. So ICICI Bank again stands quite clear in terms of earnings delivery and in terms of consistency. While HDFC Bank, I think a lot has happened in terms of news flow. I hope they get their act right. But if I have to look at the historical track record of HDFC Bank, yes, I would definitely agree with the fact that over the last couple of quarters and years, HDFC Bank has not done well. That's one of the reasons why it is available at a reasonable valuation when you compare likes of ICICI Bank and Axis Bank. When it comes to Kotak Mahindra Bank, it has had its own set of problems. First of all, on the news flow front, and secondly, on the delivery front. IndusInd Bank, yes, this also suffered a little bit of setback in terms of news flows. Did correct from those levels of 1,000 plus to maybe about 700 odd, if I remember it right. And then again, it has recovered to 1,000 plus levels. So again, as a blanket disclosure, all the names that we are discussing, Snehi, that is ICICI Bank, HDFC Bank, Axis Bank, Kotak Mahindra Bank, and of course, IndusInd Bank. We are maintaining a positive stance. And I'll also take 15 more seconds, Snehi. My sense is that as far as not only the first quarter earnings goes, but for the couple of quarters of earnings to look forward to in the future, I think the entire BFSI segment should do reasonably well. And my core belief, Snehi, is that the credit demand is going to keep the loan book growth quite steady and upwards.
Okay. Gaurang, even within the private sector banks, I know you suggested ICICI has delivered blockbuster numbers, but it already trades at a bit of a premium. Is there a value play somewhere, a tactical buy, maybe for the next quarter or two, where earnings could surprise on the upside, which probably an investor should capture?
Harsh, honestly, I'm not in a position to give a 3 month, 6 months call. You know that very well. But yeah, on the possibility of improvement on earnings and scalability, I definitely feel that there should be a lot there in ICICI Bank in terms of earnings and the stock price movement upwards.
Risk reward, is HDFC better? Is Kotak better? Because they trade at a discount versus ICICI. Is that something that you would look for, a slightly larger alpha?
So larger alpha will depend upon the earnings, Harsh, honestly speaking, and that will depend upon how the management gets its act together and get their, gross net NPA on the downside. Of course, undeniably, HDFC has been scoring well as far as the gross net NPAs are concerned, way below the industry standards. Provisioning right back should also strengthen up the balance sheet. So if they are able to, I'm sure HDFC will be able to do it. I'm not too sure as far as Kotak Mahindra Bank is concerned, though we do have a positive coverage on Kotak Mahindra Bank. I think Kotak will have to give its ability of test and deliver on numbers.
Okay. And Gaurang, recently we've seen a major reshuffle coming in when it comes to some of the top posts within the private sector banking space. We've had CFOs rejigs happening between Axis, HDFC, Kotak, all of them have been in focus. Give us your sense on how you've read this development.
So I think, first of all, heads are going to roll, not only now, Snehi, they are going to roll in future as well, as and when the time comes and the maturity level comes. But what I am able to see is that there is no dearth of talent and capability and capacity as far as replacing all those individuals are concerned, whether at mid or at top level. While these news flows will have an impact on the stock price movement, depending upon what the news flow is. But overall, I think not focusing on just a particular person in a particular organization. I think an organization is a contribution of overall team. And on that front, I think things should get back to normal once, the empty chairs are full again and business strategy is laid down at ground level.
And what would you look for in terms of commentary, Gaurang? Faster loan growth is something we're all surely penciling in. Probably a stabler net interest margin number all through this year is the other thing that we should start to factor. What could surprise on the downside, upside from a commentary standpoint?
From a commentary side, I think on the positive side, a decent amount of downtake on the gross net NPA and, of course, the provisioning front, adding on to the strength of the balance sheet. Loan book growth will definitely throw in a little bit of positivity. CASA ratio is something that we will definitely be looking forward to. And of course, how banks are now making themselves capable of AI, Harsh, and taking advantage of AI and possibly reducing on the cost of manpower. This is at a very nasal stage, Harsh, because some banks have already started to include AI into their day-to-day work. But how will that transform into cost saving is something that we need to watch out.
We'll be watching out for that. But on that note, Gaurang, thank you so much for your time. Good to be speaking with you, and thanks for sharing with us your outlook when it comes to some of the large private sector banks. Yes, this weekend is going to be a heavy one to watch out for when it comes to those earnings. The stock reaction will be seen on Monday, so we'll be gearing up for that. But with that, we're completely timed out on this edition of Market Edge. From Harshmi and the team that put this show together, thanks so much for watching.